As I've had conversations with investors over the recent weeks, I've grown much more optimistic about this year and grown more optimistic about velocity as we move forward. So if I take a step back and I look at the overall economy, the amount of uncertainty in our economy has definitely dissipated. It appears that Powell has successfully orchestrated a soft landing of the economy, and GDP is projected to be 2.1% this year. On the multifamily side, our fundamentals remain very strong. We have vacancy right now at about 5.7%. That might go up a little bit above 6% as a result of new construction coming online this year, but we still have positive rent growth and positive NOI growth. The root of my optimism really comes from the 10-year Treasury, because what happened in 2023 was the 10-year Treasury went from about 3.2% up to 5%. So that's a 180 basis point increase in a very short period of time. And that increase caused uncertainty in the marketplace. So those buyers had to step back and wait for the market to have a little bit of stability before they came back in. There's currently $240 billion on the sidelines earmarked for real estate, and we know a very large percentage of that is earmarked for multifamily. That is waiting for the market to find a bit of stability so that it can go back into the market and start investing. And what's happened on the 10-year Treasury side is that for the past 70 days, the Treasury has remained somewhat range-bound near the 4% mark, which has created more stability in the marketplace. So if we take a step back and we look at these factors, what we have is buyer demand that is substantial, that we know as a result of $240 billion of dry powder on the sidelines. We know that those investors are looking in the marketplace because our CAs have dramatically increased over the past quarter. On the sell side, we also see that BOVs are increasing, and we know that there is increased demand from the sellers who are going to be bringing more properties to market, combined with relative stability in the Treasury market as the 10-year has remained at near 4% for the past 70 days. So if you're an investor, whether that's a buyer or a seller, and you've been on the sidelines for the past year, now might be the time to start revisiting the market, understanding what values are going to be, because I feel like as we progress, velocity is going to increase, and it could increase substantially.